Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish army on Friday as the market has started to stabilize up over the upper time, currently 104.70 of the steep and more recent mid-February to end of March bearish Andrews Pitchfork. This Pitchfork will now be retired after this commentary. Additionally, it was also another close over the short moving average, currently 105.20. And that's the recent partner to the upper time. Below we now have the congestion area 104.51, 104.92, which includes the February and March 2017 lows at 104.92, as well as the congestion area 103.38 to 103.69, which contains the December 2016 and January 2017 lows, as well as the lower time, currently at 103.42 of the January to May 2021 bearish Andrews Pitchfork. It was this lower time of this larger, longer-term pitchfork that broke the back of the move since late March. Looking now at more recent action, the move on Friday did not help, nor really hinder, the three-day bullish lopsided stick sandwich pattern that had been in construction over Tuesday to Thursday inclusive. However, the close back below the April 2017 low at 105.68 was a concern for the bulls out there. Overhead, we now have the 2020 low at 106.35, which had been an effective cap on the market 3 weeks ago. Plus, dropping into the frame from above, we have the middle time, currently at 107.13 of the same January to May 2021 bearish Andrews Pitchfork, plus the short medium moving average, currently at 107.86. Now, this Pitchfork has been breached a few times, but is still nevertheless effective at showing the bearish angle of attack of this market for over a year now. So far today, an open right on the April 2017 low for a small dip, but now with an attempt up over the 2020 low at 106.35 and towards the middle time. Cable, aka sterling against the US dollar. Small bullish white soldier on Friday, a follow-on higher to the previous session's counter-to-the-counter bullish opening white Mariboso, bullish piercing line pattern, and possible day 3 and a 3-day bullish stick sandwich pattern. All that's a lot to take on, but that is what the market has managed to recently do. The move higher had constructed an interesting pattern as well as part of its efforts to overcome the congestion zone between 124.78 to 125.09, which contains the 38.2% Fibonacci line of the March 2020 to June 2021 move at 125.09, and had capped the rises earlier last week. First, prices closed on Friday within this congestion zone, though within the previous day's range as well. Next thing, between Tuesday and Thursday last week inclusive, the market constructed a 3-day bullish stick sandwich pattern, which Friday's action was a follow-on, if only a small one. Well, now all depends on if the market will overcome this 124.78 to 125.09 area. As apart from the high 3 weeks ago in the 126.35 area, we have little resistance overhead until the September 2020 low at 126.72. So far today, a lower open, just under the 124.78 to 125.09 congestion zone, but then a strong move higher that's punched up through the zone and started a journey up towards the 126.35 area. Euro sterling, a combined bearish engulfing pattern and bearish dark cloud cover pattern on Friday. On the surface, not that hard a pattern to construct as the previous session was an indecisive spinning top. However, Friday was also the third day of seeing the market try back up to the 8,500 area and not making a dent. Hence Friday's close back down below the upper trend line, currently at 84.72 of the larger extended diamond pattern, as well as the April 2021 low at 84.70, plus just above the flatlining long moving average, currently 84.43. is seemingly indicative of the attempts to move higher last week have perhaps come to an end. However, just in case the market does change its mind and move up from both diamond patterns, then on the upside we have for the smaller lopsided diamond pattern a primary target X in the 86.80 area and a secondary target X, harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder target, secondary target X3 in the 88 even area. Additionally, there is one final pattern, and this is a big one, on which the market has also sent mixed messages as to whether it is a false break or the real move. You see, I've spoken now for countless days, weeks and months even of the very large falling wedge pattern, 84.72 to 81.66, which was still in operation, but which had fallen into the shadows a little with the rising prominence of the diamond patterns. This pattern had been triggered, but has left us with questions. Has the most ambitious target of all on the upside, target X5 for this pattern, is in the 88.65 area, though with this close lower I might have to set it aside for now. So far today, a higher open but a failure to move up over either initially the April 2021 low or the upper trend line of the extended diamond pattern. Indeed, we'd seen a strong move lower down through the long moving average and approached the broken upper trend line of the smaller lopsided diamond pattern, currently at 84.24. However, this move has been halted, indeed reversed back up, such that we are now beyond the April 2021 low and the upper trend line of the extended diamond pattern and pushing through the highs of last week. And we're on the verge of making a daily key reversal. Eurostar against Indian Rupee. Yet another complex and interesting pattern on Friday, a third countering bullish opening long white Mariposa. If you didn't already register this, Friday's action definitively killed off any opportunity for a bearish stick sandwich pattern. Instead, this area between about 77.40 to 77.80 is swiftly becoming a congestion area. What was interesting this time was how it was the second highest high of all time and the highest close of all time. Overall, prices are still in between the lower time below, currently at 76.92, and the middle time above, currently 78.37, of the mid-January to early April bullish Andrews Pitchfork. We still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between there and here, we have the previously mentioned middle time and also the upper trend line, currently 78.21, of the late August to date ascending expanding wedge pattern. So far today, a reactionary open lower, but still only not only well within Friday's body, but also not really following through lower as yet. It is a bit of a range, but not much. The bottom of the recent action and where we're likely to find support is around the 77.40 area. US dollar against the Brazilian real. A bearish opening black Mariposa on Friday. There was a suitable follow-on lower to the previous session's immediate countering bearish double. This time the market only closed for a second consecutive time below the big 50% Fibonacci line of the October 2019 to May 2020 move at 496.58, but also below the flatlining short-medium moving average, currently 488.90, and the 2021 low at 489.08. Further below, we have the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26, the June 2020 low at 481.62, and the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. Overall, we are in between the upper time, currently at 513.19, and the middle time, currently 467.09, of the start of 2022 to date bearish Andrews Pitchfork. This is an early bearish pitchfork, but it may have some merit forming the recent bearish angle of attack. US dollar against the Mexican peso. A second bearish black crow pattern and a follow-on to the previous session's immediate countering bearish engulfing pattern. The recent top of the market is still defined by the lower trend line, or uptrend if you will, of the June to October 2021 descending triangle pattern. That's currently at 20.0583, whilst the base of the attrition evidenced by the market moving down through the late March and April base double bottom congestion, that stretches between 2010 down to the 1971.68 area. Now, I'd recently asked the question, is the April to date action a possible cat's ears pattern? Well, I think this has merit, and I've placed a, let's say, conservative target below, though the move down, should it happen, will probably extend that further. As there's a bit of a lopsided pattern, I've used the minimum size move possible for this. Target X is in the 1954 even area. So far today, a test higher, though still within Friday's main range, and a test lower then, with the market currently favouring the downside and pushing below Friday's low and towards the end of the double bottom congestion, the 1971.68 area. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.